what does the growth trajectory look like for India? Because we've seen numbers for the second quarter come in better than expectations, still a -7%, but the direction seems to be positive. And so what does that mean for Q3, Q4 and the following financial year?
Like I said, I mean, of course, we saw a deep downturn of -24%, and then a good recovery in the recent quarter. But you know, every deep downturn is always followed. The numbers in the following quarter always look good. But if you see the PMIs for both manufacturing and services have retraced again for the month of November, and the demand seems to be tapering off once more. Also, you know, going into next year, the availability of a vaccine will be a key catalyst. And although I do think that the demand is going to rebound, but it is not going to be a very quick rebound. It's going to be more of a slow pace, and that is the reason. I think I'm forecasting still a decline of over 8% for FY21 and a rebound of 9% for FY22. The bigger problems will be seen after 22, where we kind of could see a deterioration in the medium-term growth trajectory because of the scarring issues and the issues that the Indian economy was facing previously of stressed corporate balance sheets, of the high NPAs and the fallout in the NBFCs. These could come back with these could come back much stronger going into 2022. So I do think that the potential trend growth rate for India could slow down as well.
Mm. And speaking of that, I mean, things are still pretty uncertain for India, Charu. This is Christine, by the way. A lot of flows into the Indian rupee simply because, of the yield thing, yield differentials. How concerned do you think policymakers are about the strength of the Indian rupee and whether it could impede the country's economic prospects?
I think the liquidity situation in India, the surplus liquidity is creating a bit of a tension for the RBI right now. The short-term rates have plummeted so much, and the repo rate, the 4% repo rate, has kind of become meaningless right now. So the RBI has to address the surplus liquidity situation today when they meet, and they have to come up with steps that would soak up this liquidity, but at the same time, they have to be really cautious that the markets don't react negatively to that. So something like market stabilization bonds, or the reverse repos, which are more of a 3 to 6 month tenor, they really have to do something to kind of provide a floor to the short-term rates.